In this presentation, we will continue on with our comprehensive problem related to a public university. Last time we entered transactions related to the public university information on the left side, entering that information into the blue area on the right side, then posting it to the trial balance. We're going to continue with this process, continue on to number 9. However, we are out of space in our current general journal. Therefore, we need to unhide some cells and then hide some cells. So we're going to do a little bit of maintenance first. The hidden cells are going to be between cell I and O. So we want to put our cursor on, I'm going to put it on H, left click, and then select over the entire columns to column O, let go, and then right click on those selected area and unhide. And that'll give us our cells. That's where we want to work. Then we're going to hide these cells because we no longer need them anymore at this time. Don't delete them. We're just simply hiding them. In order to do that, we're going to put our cursor on the E, left click, and select over to I. So E to I, E, I, O. We all had all the vowels in. And then we're going to let go, right click on the selected area, and then we're going to hide. So we'll hide those. And now we have our data on the left that we're going to be using in order to make the journal entries in the middle that we will then post to the trial balance worksheet on the right. Scrolling back down where we left off last time, we just completed number 8. I'm going to ungreen number 8 because now we are on number 9. So number 9 is going to be our first transaction for this presentation. We're going to make that green so we can know where we are at. Number 9 then says that we have general expenses related to administration and operating of academic program. We have research expenses related to the development of student performance. And then we have the accounts payable at the end of the period, which is going to be $57,000. Okay, so we're going to start off with the general expenses related to administration and operation of academic programs. We're going to record those expenses. So that's going to be expense account that we will record. We will also record with the first transaction. We're going to break this out into a couple transactions. The research, and that's going to be research expenses of the $27,000. And then we're going to record the other side of that going to accounts payable. So we're going to assume that we have not yet paid them at this time. So we're going to say we have then number 9, expenses related to the general expenses. So I'm going to scroll back down, pick up the expenses for the general. Then we're going to pick up expenses related to research. So I'm going to scroll back down. We're going to pick up expenses related to research. So research expenses. Let's see, where is the research expenses? There we go, research expenses. And then we'll pick up the numbers, which will be equal to, I'm going to pick up the numbers from our data down below, the 3,245,000, and in L4, we're going to pick up the data, the amount of the 27,000. Then we want a credit. We're going to be on the credit side. I'm going to do this with a plug formula, the negative sum formula, the trusty negative sum of those cells. That's going to be the accounts payable equal to the accounts payable. So we'll pick up the accounts payable there. Then we'll post this out. So we have the expenses general up top. So we're going to scroll over to the right and post the general. Expenses general, that's going to be here. We are in cell Q. So Q24 will be equal to, scrolling back up, picking up that number, the 3,245,000, and enter. So there we have that amount. Next, we're going to be picking up the expenses for the research. So we will scroll back down and we'll take a look at the expenses related to research. That's going to be in cell Q25. Within Q25, we're going to say equals and scroll back up to the expense related to research for the 27,000 and enter. And next we have the accounts payable. So accounts payable is going to be a liability account. So we're going to go to accounts payable. We are in cell Q11. Within Q11, we'll say equals. Scroll over to that 3,272,000 and enter. And that goes up in the credit direction as well. So then scrolling back down, we see that we are back in balance given by the green zeros. So that's going to be the first component of our journal entries. Let's scroll back over, see what else we've got. So the next thing we need to do is record the accounts payable. It needs to be 57,000. Let's see what's in accounts receivable or payable now. It's currently at 3,383,000. So now we're going to record the accounts payable, basically payments that we made through the period by basically adjusting it to the ending balance. So, all right, so we're going to say that, let's pull out the trusty calculator. We're at 3383000, and we need to be at, let's go back over here, the ending balance, we're saying it should be 57,000. So that's a difference of 3,326,000. So we assume then payments that were made on account, payments paying off accounts payable, is the 3,326,000. So let's record that now. We're gonna scroll back over here. Record that. We're going to say that cash was paid during the time period. Let's record this in 9B. We'll call it 9B. Cash is going to be the credit. Let's start with that. It will then be on the bottom. So cash is on the bottom with the credit. And then on the top is going to be the accounts payable. So accounts payable will then be on the top. The amount is going to be for the 3,326,000. 3,326,000. The credit will be for the same amount. So we'll have the credit for the same amount. There we have it. There's our transaction. Let's record this. We're going to start with the accounts payable. Accounts payable is going to be here in cell Q11. Within Q11, we're going to go into that cell by saying F2 plus F2, and then scroll over and pick up that 3,326,000 and enter. Then we have the cash. So cash is going to be up top. That's going to be in cell Q3. Something's in it, so we're going to have to say F2 plus F2, and then scroll over and pick up the cash amount. So there we have that. And then if you scroll back down, you can see we are back in balance once again. So we're back in balance once again. Let's scroll back over to our data. And the next thing we want to pick up and look at is the fact that this research expenses related to the development of student performance, we're going to say that that qualifies as something that we think we can get reimbursed from number 3. You'll recall this transaction from the prior presentation where we did not record anything. Notice received from federal government that funds may be received in current year for costs incurred in creating student grading criteria. We're going to say that this qualifies to 27,000, and therefore we expect to get reimbursed for those expenses, which will be the grants. So now we're going to record, considering the expenses are there, the receivable related to the grants. Okay, but only for the costs that we have incurred, which is the 27,000. So we're going to say that we have 9C now, 9C, and we're going to have a receivable. We're going to call it grants receivable, and that will be equal to, we'll pick up the 27,000. So that's equal to the 27,000. That'll be the debit and the credit. And then we're going to have the other side of it, which is going to be revenues for grants. Revenues for, we'll call it gifts and grants. So revenues for gifts and grants. So there is our transaction. Let's post it now. We've got the accounts receivable up top. So the accounts receivable, we're going to scroll back over and look at the accounts receivable. That's going to be in cell Q4. Within Q4, something's in it. So we're going to say F2 plus F2. Scroll over to that 27,000. Picking up and increase. Note that this grants receivable was recorded to the wrong receivable account. If we scroll back up top, we see the receivable went to the accounts receivable. We need it to be going to the grants receivable. So what we're going to do is we're going to push forward with the problem as it posted to the wrong receivable account up top to the accounts receivable. We will then adjust it at the end. If you want to adjust it right now and put it into grants receivable, you can. It probably won't throw anything off, but the numbers won't be exact. I would recommend actually highlighting it just like this, making it green, showing the fact that you're recording this to the improper account, then go back to it when we get to the end of the problem, just so you don't have any numbers that kind of throw you off as we work through the problem. We've seen the accounts receivable. Then we have the revenue, grants, gifts, and grants. So we're going to scroll down to that account. So we've got the revenue down below. We've got the gifts and grants. We are in cell Q21. Within Q21, something's in it. So we're going to say F2 plus F2. And then scroll over to that 27,000 credit, increasing in the credit direction, the gifts and grants. Scrolling back down to the totals, we see that we are in balance, given by the green zeros. Okay, back to the left. We're going to say that number 9 has now been completed. Let's ungreen number 9, given that it has now been completed. Then we're on number 10. We'll make that green. That's what we're working on. Accrued liabilities paid. So we're going to pay the accrued liabilities. So we'll have to see, let's see what's in accrued liabilities. This is going to be number 10. That's going to be a liability account, of course. We'll see here that we have the $44,000 in it. We're going to say that we paid those. So we're going to basically credit cash and debit this one, making it go down. Okay, so we're going to say, I'm going to put the cash on the bottom. It's going to be the credit. I'm going to say equal to, and let's pick up the cash amount. And then the debit is going to be the accrued liabilities. Then we'll pick up the dollar amount. So I'm going to say it's a credit over here. I'm going to pick it up in the debit amount by saying negative of that credit. Again, don't pick up this credit because you'll get a circle reference when you try to post it. You need to pick up this credit, and then we'll post to the blue area, which will make the end number go down to 0. So there's the 44,000. We're going to say negative of that number. There is our journal entry. There is the debit and credit. Let's go ahead and post it out. We've got the accrued liabilities first. Accrued liabilities is going to be in cell Q12. Within Q12, we will then say equals, point to or go to the 44,000 and enter, bringing that balance down to 0. Next, we have the cash credit. We're going to go up top to the cash credit. So we are in cash in cell Q3. Within Q3, something's there, so we're gonna go into it by saying F2 plus F2, then scroll back down, pick up the 44,000 and enter. So there we have that, and then if we scroll back down to the bottom, we are back in balance with the green zeros, so that looks good. All right, let's see what else we got. We're now on, we've done number 10. Number 10 has been completed. I'm gonna right click on that. We're gonna ungreen it. Now we're on number 11. Looks like a long one. We got the adjusting entries within number 11. So there's going to be a few different kind of transactions within number 11. Adjusting entries, similar to a for-profit type of organization, these will be. And so the first adjusting entry is related to depreciation. Now this is going to be a straightforward type of transaction. It's similar to a for-profit type of organization. And so it's just going to be simply a debit to depreciation expense and a credit to accumulated depreciation, as we have seen for a for-profit. You'll recall when we think about the depreciation, we have the capital assets, which is like property, plant, and equipment, those assets that are long-lived. Therefore, we put them on as an asset instead of expensing them when purchased. Then we allocate the cost in accordance with the matching or expense recognition principle by the use of depreciation expense, and then we've marked down the value on the asset side of things with a contra asset account called accumulated depreciation. So therefore, we have the capital assets on the books at this $2,404,000, the accumulated depreciation at the $292,000. The net of those two, or difference between them, is the book value. Okay, so let's go to number 11. So we're going to say number 11 then. The debit is going to be depreciation expense. So we will debit the depreciation expense, and we will credit then the accumulated depreciation. So we're going to credit accumulated depreciation. The amount is going to be equal to, scroll in to the left, we will then pick up the amount, the 65,000. 65,000, that'll be the debit, that'll be the credit. This is our transaction, typical transaction, similar to a for-profit or exactly the same as a for-profit organization would be. All right, so let's record this out. We're going to say the depreciation first. That's the debit. Scrolling back down, we're going to pick up the depreciation. That's going to be in cell Q27. Within Q27, we're going to say equals. Scroll back over to the 65,000 and enter. So there we have that. Then we're going to go to the accumulated depreciation. Accumulated depreciation is going to be in the capital assets. We are in cell Q10. Within Q10, we're going to say equals and scroll over to the 65,000. 65,000 and enter. That increases this account in the credit direction. The difference between the two, of course, is the book value. You can see we're back in balance, indicated by the green zeros. So we look good there. Let's see what else we got. We're going to go back down to number 11. I'm going to ungreen these top two. We're going to work these piece by piece as we go through. And the next one's going to be the allowance for doubtful accounts need to be adjusted to. So we are going to adjust the allowance for doubtful accounts to this 19,000. So let's take a look at what is currently in the allowance for doubtful accounts and remind ourselves of what it is. This will be very similar to a for-profit organization as well. Here's the allowance for doubtful accounts, if not the same as a for-profit. Well, very similar, not quite the same as a for-profit. You'll recall this is a contra asset account as well. The allowance for doubtful accounts is related to the accounts receivable. Accounts receivable is what people owe us. We expect that some of it might not be collectible, or we predict that some of it might not be collectible. We're going to make an adjustment for that, or an estimate of that, which we determined, I believe, was 19,000. And then we are going to make an adjustment for it here. So we want to make a contra receivable account for that. So then if we add those up or subtract them out, then we would get the net value of the receivable, what we actually expect to receive. So we said that the allowance for doubtful accounts should be 19,000, I believe it was. And what's in there currently is 16,000. So we'll subtract those two out. We need to adjust it then 3,000 upwards. So we're going to adjust it 3,000 up to get to that 19,000. Where did we get the 19,000? It would be estimated typically with an accounts receivable aging account generally. So we won't get into that. If you want to look at the allowance method, we have a course on accounts receivable and the allowance method that you could look into for that. Transaction will be a debit to the provision for bad debts. And that's the thing that's going to be slightly different. We would typically just call it bad debt expense. We're going to call it here provision for bad debt, which is pretty much the same thing. And then the other side is going to be going to the allowance for doubtful accounts. Allowance for doubtful accounts. And notice when we record this, we are in essence kind of reversing the revenue account. But rather than posting it directly to revenue at this point, and we're going to be putting it into this account, this provision for bad debt. So it's kind of like almost a contra revenue account here, but we typically record it as an expense in a for-profit type of organization. So we're going to, because it would be bad debt expense here, provision for bad debt. Okay, so let's make the number here. The number we said was at 3,000, I believe. That's the debit and the credit. So we'll record this, see if it does what we expect it to do. What do we expect it to do? We expect that this 16,000 should go up to what we've said it should be, which is 19,000. All right, let's do that and see if that happens. So we have the provision for bad debt. Let's do that first. That's the expense down below. That's going to be recorded in cell Q28. Within cell Q28, we're going to say equals, scroll over to that 3,000 and enter. There we have the increase in the debit direction. And then we have the allowance for doubtful accounts. Scrolling back up for the allowance for doubtful accounts. That will be in cell Q5. Within Q5, we are going to say equals, scroll back down, pick up the allowance for doubtful accounts of the 3,000 and enter. That brings the total up from 16,000 by 3,000 to 19,000. That's what we wanted it to be at. That increases the allowance in the credit direction, decreasing, of course, the book value. All right, let's see what we have next. We're going to go back over. Well, let's see if we're in balance first. Let's do that. Let's not get ahead of ourselves. We have green zeros, meaning we are in balance. So let's go for it. I knew it would be green, but still, I should check that. So I'm going to go ahead and ungreen this one. This one is done. Next, we have accrued interest on investments. Accrued interest on investments is going to be that 900. So we're going to record that transaction now. Accrued interest on investments. That means that interest has accrued on our investments, an asset type of account that we have not yet received in cash. So this is going to be a typical kind of adjusting type of entry we would still have in a for-profit or type of organization as well. We're going to call this 11C. And so what we're having is some type of asset. We didn't get cash yet, but we're owed something. So it's going to be like a receivable. We're going to call it interest receivable. So interest has accrued on investments. It's owed to us. We already have earned it, but we haven't received it. Therefore, we're going to record the receivable here with the adjusting entry. So we have interest receivable. Then the credit is going to be some type of revenue account on the investment that we have earned. So the credit is going to be investment income, revenue investment income. The amounts then being equal to the amount in our data down below, which is going to be that $900. The 900, then it's going to be the debit and the credit. That's going to be our transaction. Debit, interest receivable, credit, revenue, investment income. Let's record it out. Let's post it out. Here's the interest receivable. We'll scroll back up to interest receivable and pick that up. That's going to be in cell Q7. Within Q7, we're going to say equals. Scroll back down to the interest receivable, the 900, and enter. So that one has going up. Then we're going to have the revenues, investment income. Revenue investment income is going to be here. That is in cell Q22. Within Q22, there's something there. So I'm going to go into it by saying F2 plus F2 and then scroll over to that 9,000 and enter. So that goes up in the credit direction. That puts us back in balance. All right, let's go back over. I think there's going to be one more here. I'm going to scroll back down to number 11. We have completed the one with the 900. Now we have the fair value of investments at year end was the 280,000, and income earned on investment that was restricted. Of that, 5,800 was restricted. So now we're going to adjust our investments to the fair value. So in other words, we have this 280,000. Remember that number. We're going to go back up to up. We're going to look at our investments, which are here and currently at 266,000. So they went up. We had a gain on our investments. Good job. Good financing. Good investing strategy. Buy low, sell high. That's my strategy. So then we're going to say it should be at 280,000 minus what we have here, which is going to be the 266,000. That means we have a 14,000 that it needs to increase. So we need to increase the investments by 14,000. The other side is going to be some type of revenue. Now, once again, we said that part of this is going to be restricted, but we're not going to record any restriction with the trial balance indicated by just basically unrestricted or restricted within the trial balance accounts, but rather when we do the closing entries, we'll have to track the part that is restricted and record it at that time when we record the adjustment and the closing amounts to the net position accounts, which are similar to the equity accounts. We'll see that in the next presentation. So the transaction here then is simply going to be, and we'll call it 11D, 11D, 11D. And that's going to be investments increasing. So we're going to say that the investments will be increasing. And the other side is going to be revenues. So we're going to call it revenues for the changes in the fair value of the investment. The amount we calculated it to be, 14,000. That, of course, will be the debit. That'll also be the credit. Again, no other activity happening here for the part that might be, will be kind of restricted. We won't do that until we enter the closing transaction. Therefore, fairly straightforward transaction. Let's see if we post it. See if it does what we expect it to do. What do we expect it to do? Well, we want this 266,000 to increase to what we said it was supposed to be down here, and we said it was supposed to be down here. Let's go look. The 280. So that should end up at 280. All right. So here's the investments. We're gonna post it and see if that happens. Scrolling back up top, we have the investments in Q8. Within Q8, we will say equals. Scroll back down to that 14,000 and enter, and see that it should increase as it does to the 280,000. That's what we thought it should be. That's the current price, so that one's right. And then we're going to go to the revenues for the changes in the fair value. So we have the revenues for the changes in the value. That's in Q23. Within Q23, we're going to say equals, point to the 14,000 and enter. And then that goes up in the credit direction. That puts us back in balance. So we're back in balance. This is our accounts right now. So you can take a look at it. That's what we have so far. Next time, we're going to take this information and we're going to do the closing entries for it, closing out the temporary accounts. It'll be great.